Hi, this is Drew Tignanelli. This is our fourth quarter update for the Financial Consulate, and as you can see, this is not Timothy J. Maurer with me. Do you ever wear a bow tie, Tom?
I have not worn a bow tie.
Yeah, unless you have a nice tuxedo
Unless
on.
it's a tuxedo, exactly.
Yes, that is exactly the way it's supposed to be. Anyway, this is Tom Bonvissuto, and good Italian boy.
That's right.
That's
Sicilian.
Well, it's not the same, but it's close. You like wine, though, right?
That's right.
Yeah. So, anyway, Tim is in Tennessee working with a client, and so Tom is joined our firm as of Monday of this week, actually. As of the week of this taping. You might not get this video until next week. But Tom comes to us with a Chartered Financial Analyst credential. Mm-hmm. That is the highest credential in the investment management world. You also are a CFP, Certified Financial Planner, and you're also a Chartered Financial Consultant, which is sort of like a CFP. It's a little bit more of an emphasis on insurance, but it's basically a financial planning credential. And we asked Tom to join our firm, and he was excited about the opportunity because we feel that we need to explore, a continuity of the business. So 10 years ago, I was the only one really running the business. And so we wanted to have continuity. And so that's why a lot of the people have been joining us. And so now it's great to have you with us, Tom.
Yeah, pleasure being here.
So tell everyone what your background is and why we're so excited to have you here.
Well, I've been in Baltimore for 26 years now, all in the financial services industry. I've spent the last 19 years managing portfolios, most recently with a firm here in Baltimore. And I'm excited about the opportunity to come in here and help people. I mean, my passion is to help clients, help individuals. So I'm looking forward to be able to do that and apply the investment strategies that I've been working on for over 2 decades to the client portfolios here to help clients meet their goals.
Yeah. Now, you were working more with large corporations, large institutions, pensions, foundations, and things of that sort.
Correct.
So, but you've always had a passion to work more with the individual on a day-to-day basis.
Exactly. I mean, even though those organizations are made up of individuals, it's really been my passion to help people in a very tangible way. So people come to me all the time. When you're in the business, people always think, you can do something to help them.
Right.
And people would come to me and say, should I buy Apple?
Right.
And I said, I have no idea whether you should buy Apple. I need to know a lot more about you, before I suggest whether you buy Apple or not. So it's more comprehensive, and I think the industry does a poor job of looking at things from a comprehensive, holistic perspective. Mm-hmm. And when I met with you and others here, that really got me excited about that holistic approach. And the investments are definitely a component of that, but they're just a component of that. They're an important component. It's going to help the growth. It's going to help, as you mentioned, risk and other things like that we want to manage. But it's just a piece of the puzzle that we're going to put together and really enhance.
Right. And the thing I like about Tom is he's proven he's Italian because he's talking with his hands as much as his mouth. And Tim just sits there like this, Anyway, the thing we were really excited about you is that you had that CFP credential. And, that's not common. You don't see a lot of CFAs with a CFP credential. So you understand that our firm is all about comprehensive personal financial advice. Mm-hmm. That's what it's all about.
That's right.
You can be the greatest investment person in the world, but if you don't mix it with helping clients achieve their goals and objectives and understanding estate planning and income taxes and insurance and all the other things that make up financial planning, to some degree, it's worthless.
Right.
So that's what we're looking to do. And so part of our goal is to refine what we call risk opportunity investing, to create, to make it much more rules-based such that it becomes a unique investment service that we believe has the potential, and we can never guarantee this, of course, to achieve those goals and objectives of our clients.
Correct.
And that's what we're looking to do. So why don't you give everybody, they've heard me for 2-3 years talking about what I see in the market. What do you see in the market? What do you see happening right now? I'm not going to put you on the spot or anything, but go ahead.
That's okay. Actually, yesterday, we went to a lunch meeting with Jeremy Siegel, well-known professor.
Stocks for the Long Run.
Stocks for the Long Run. Actually, the 5th edition is getting ready to come out, and I think it's going to be a great book, and people should probably go out and buy it. However, you have to put that in the context of the current market environment. You have to put that in the context of your overall portfolio structure. And so, some people are saying the markets are overvalued. Other people say they're undervalued, right? So there's always people on both sides of the trade, and I'm talking about the stock market in particular. And right now, the stock market, in many ways, is the most attractive, right? With cash at zero, money markets, CDs, anything you get at the bank is at zero. The 10-year Treasury's around 2.75%. That's not really that exciting because you can go out and buy dividend-paying stocks and get a higher yield on that and pay a lower tax rate. Mm-hmm. So, the stock market has really been structured in such a way, or the government is manipulating things in such a way to push people into the riskier assets, aka the stock market. There are attractive parts to the stock market right now because company earnings have been good. There's cash on the balance sheets. There's a lot of good things going on there. And the PE ratios are not extraordinarily high. PE ratio being the price to earnings ratio of a stock. And so we're running in that 16 to 17 range, which is kind of about average for the long run. Stocks are somewhat attractive still. However, especially relative to other investments. However, there's always a risk of an exogenous event happening.
Like a government shutdown.
Like a government shutdown, which happened this week. So when you get this, we'll see where we are at the point you all view this. The expectation is that this government shutdown could go on for a month, or it could be over today.
Right.
And we don't know what's going to happen with that. The market so far has taken it, with a grain of salt, and really hasn't done much. First day, it actually went up a little bit. Last couple of days, it's been slightly off. So it hasn't been a dramatic move in the market. The market prices in these events before they happen.
Absolutely.
So it's a forward-looking indicator.
So, basically the market is probably the only real opportunity people have, along with some other short-term bonds or floating rate bonds, which we're starting to position more in our clients' portfolios. And, it's kind of a conundrum, though, isn't it? Because one event in this kind of market, in this kind of environment, could send the market down. So that's why we have to still be cautious in our client portfolios who can't afford to take those big downturns.
Well, for sure. And recognizing whenever somebody says you're going to get a higher return, there's more risk associated with that. Mm-hmm. There's no free lunch out there. So you have to be cognizant of those issues.
Now, we've had a great year in the stock market, and one of the things you wanted to present in here is the concept of giving appreciated stock away to charity and the benefit of that. Why don't you talk about that, and then I'm going to talk about giving appreciated stock away to children who are going to college if you can't get the American Opportunity Credit.
Sure. Many of the people watching this right now are charitably inclined. So, but most of us write a check to that organization. It could be a church, it could be a synagogue, wherever it may be that you're making a contribution, and some very significant contributions. Well, rather than writing that check, why don't you give away securities that you purchased a year ago or more? Because in order to get that full benefit from the tax treatment, it has to be greater than a year that you held it. So it can't be your Twitter that you're going to buy in a couple of weeks, and you can't, just turn that around if it doubles and give it away. But if you bought a security more than a year ago and it's appreciated, so you bought that at $50 and now it's $100, and you were going to give $100 to that charity, well, just give them that share of stock, and you've paid $50 for it, and you don't have to pay a capital gain on that $50 appreciation that you have in that security. It also can be helpful if you've inherited securities, because sometimes we don't know what the cost basis was when we got it, or all those kinds of things. So it's a great opportunity. I mean, if Grandma has some certificates she gave you that were in her safe deposit box, and somehow they haven't been converted over to what we call DTC and made it electronic, it's a great opportunity to give them away. You don't have to worry about any of those details.
Right. So that is a great strategy. And then from the appreciated stock to children, if you have children that are going to college and your income's over $180,000, you don't get the $2,500 capital. You don't get the $2,500 tax credit for the American Opportunity Credit, and so it just kind of disappears. One way to take advantage of that is give appreciated stock to your children, let them sell it, And that literally can wipe out something in the neighborhood of $20,000 to $30,000 of taxable income. And it can be a very significant tax savings to do that. And it's a little more complicated than that, but either the charitable appreciation, stock giving, or the American Opportunity Credit, we can talk to you more about that if you feel that that's some strategy you would want to hear more about and maybe even execute. So anyway, we're finished. And one thing about you is you dress better than I do.
Just some days. Want to make a good first impression.
Anyway, this is Drew Tignanelli saying God bless.